Intel stock just ripped on the news. Nvidia is dropping $5 billion for a 4% stake. That's huge, it's historic. It's also not the fix for Intel's biggest problem. Here's the shock. The deal barely touches Intel's bleeding edge headache, the foundry. Quick reset. Intel's always made its own chips. In 2021 it opened those factories to outside customers as Intel Foundry Services, planning to spend big on new fabs and win third-party business. But the customers didn't show up in size, losses swelled, roughly $7 billion in 2023, then about $13 billion in 2024, and the stock cratered last year. The board pushed out Pat Gelsinger in December, and new CEO Bratton is now reshaping the org. So what does the Nvidia deal actually do? Nvidia gets to use Intel CPUs in AI data center systems. Intel gets Nvidia AI tech for PC chips. Both say they'll keep leaning on TSMC in the near term for new silicon they co-design. Notice what's missing. No concrete commitment to use Intel's foundry right now. That matters because the foundry is the cash furnace. Analysts expect it to burn money through at least 2027. Some say sell it, others say if you sell it, your own chips get more expensive because you lose scale. Either way, this is the part of Intel that needs customers yesterday. Could Nvidia become one? Maybe. Both CEOs left the door open. Best case, Nvidia tosses some pilot or token designs to test Intel's process. That would help credibility, but it's not the same as moving flagship GPUs off TSMC overnight. And there's another layer: national security. Intel is the only leading-edge US chipmaker serving the Department of Defense. Most advanced chips today are built by TSMC in Taiwan. TSMC is expanding in the US, but the bulk of capacity and R&D is still in Taiwan. With geopolitical risk on the table, Washington wants a strong domestic fab. The US even took a strategic 10% stake in Intel. Intel's trying to show progress. Think Direct Connect 2025. Updates on process nodes, packaging, partnership pipelines. Restructuring under Bratton is meant to focus execution. But until a whale signs wafers, Nvidia, Apple, Qualcomm, whoever, the math doesn't change. So yes, $5 billion from Nvidia boosts confidence. It validates Intel's product side and gets both companies tighter on AI PCs and servers. But the foundry? That's still the boss fight. Watch for 3 signals: a named high-volume foundry customer, clear yield and timeline milestones that stick, and real shift of advanced designs from TSMC to Intel, even partially. Until then, the problem isn't solved. It's just better lit. If you're tracking the turnaround, don't look at headlines. Look at who's taping out on Intel's lines. That's the tell. The Nvidia partnership brings real value to Intel's core business. It strengthens their position in AI computing, but the foundry bleeding continues unchanged, without major customers committing to production volumes. Time is running short to prove the foundry model works. Government support helps, but can't replace paying customers. New leadership is streamlining operations for better execution. Technology development continues to advance, but market dynamics remain challenging. The $5 billion investment signals confidence in Intel's future. But the foundry's future remains the critical question. Success will be measured by customer wins, not partnership announcements. For now, investors and analysts watch and wait. The real story will be told in tape-outs and production commitments. Until then, this deal solves some problems while leaving the biggest one untouched. The foundry turnaround story is still being written, and $5 billion won't change that timeline.